Hey, it's Clay, and this will be a video chart on ticker symbol EYEG. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to this time frame. Think does a good job of telling the quote-unquote story of the price. And in this situation, makes summarizing the price action very straightforward. And if you say, Clay, look, summarize the price action for me, I would say a pump and dump on thin ice. Now, I'm not saying pump and dump in regards to the company because I don't know anything about the company. I'm just saying pump and dump in regards to the price action. And my definition of a pump and dump is that a price makes a really nice move, and then within a relatively short amount of time, the price goes back to where it started, or in some cases lower. So let's go through this definition, and I'll explain what I mean by on thin ice too. But as far as where did it start? Well, in my mind, it started when it broke out of this pattern here that it had formed, and we'll call the top of the pattern, kind of that breakout point right there around 43 cents. So now let's apply the definition. Well, as we just established, the price started right here, and when it broke above that former resistance and then went all the way up there. I'm assuming we can all agree, yeah, that was a really nice move. Second part of the definition, within a relatively short amount of time. Well, considering this all happened in the same day, I'm once again assuming and hoping that we can agree, yeah, all right, this was definitely a very short amount of time. The price goes back to where it started, or in some cases lower. Now, this is where the thin ice point comes into play, because to be fair to the bulls, something like this could happen. The price could come down to that thin ice point at 43, walk along it, and then start to work its way back upwards. And in that situation, what would you have? Well, you'd have a base of lows right there. You'd have a base of lows down there. If you picture each one of those as stair steps. Well, hey, again, to be fair to the bulls, they would then therefore be building an overall, higher stair steps in the upwards direction. However, if the price comes down here to the thin ice point, walks along it, breaks through, and then continues to sink to the downside, what would that be doing to the price? That would literally be putting the price right back inside of that range where it just was. And not to insult your intelligence, but price movements with true power are not going to be going back to where they were, right? They're going to make progress forward. And in this situation, I'm defining and quantifying, quote unquote, make progress as 43 cents. So are things looking pretty bad? Yeah, but you can't quite call it a full-blown pump and dump because the bulls do still have an opportunity to build that higher base and stay above 43 cents. So we'll see if the bulls can hold above that thin ice point or not next week. One of the biggest questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.